AI valuations are rising in both the public and private market, and OpenAI is leading that charge. Dealbook reporting recently that it raised $8.3 billion at a $300 billion valuation. Meantime, French AI startup Mistral reportedly seeking a $10 billion valuation in its latest round of fundraising. Joining us right now to discuss all of this is Kelly Rodriques. He's the Forge CEO. Good morning to you.
Good morning.
Do these numbers make sense to you?
They don't unless you look at the revenue progression of these businesses.
So then they do make sense to you? What are you saying?
There's 19 companies in the private market AI basket. These companies have grown on average 300% over the last 2 or 3 years on the larger side with revenue bases of $1 billion. I don't think we've ever seen historic progression of revenue like that in any sector.
So when you see an OpenAI not just capture this kind of valuation, but capturing something like 700 million people who are touching OpenAI every week. That's up from 500 just a couple months ago. I mean, that's sort of where, to the extent you get to a $300 billion valuation, that's how you get there.
Yes, and it's not just that company. That is the largest player in the space, but there are dozens of these companies emerging now. 19 of them have grown at that rate for the last 2 or 3 years.
Oh, so you think everybody's going at the OpenAI rate? Because I think they are.
Yes,
across the board.
In the 19 largest that we track, they're averaging 300%.
So then which is the most undervalued of those?
Well, I think the largest ones are where they're drawing all the attention. Anthropic and OpenAI have essentially an insatiable amount of capital trying to come into those companies.
And just one other thing that's related to this. Do you think in the end that all of this gets commoditized, or there is a winner-take-all piece to this? Because the one thing that I think when you talk to investors who are now thinking even in that latest OpenAI round, they will say, we talked about the memory function last week, that the sort of idea of persistent memory actually is one of the most unbelievable lock-in effects that you could actually create, which is to say, we used to talk about social media and their lock-in effect. This is almost different. If they know everything about you and it gets better as you use it, your decision to use OpenAI right today and then switch to something else, you might not.
So I think in the generative AI space, there's probably only going to be a couple of winners. When you look at what's going on in agentic and some of the other areas of infrastructure, you're going to have several of these companies significantly larger than what we've seen in other sectors.
Can I just ask how fleeting any of this could be? Because we hear that the lead among each of them is a matter of weeks or months. And then we see the poaching game that's taking place, where you try and steal your top competitor's talent, and you're willing to pay hundreds of millions, if not $1 billion, to get that. If you can do that, do you take your competitor out at the knees, and are you only as good as the employees that you're holding on any given day?
I think you could see some very interesting things emerge as these businesses start to consolidate other businesses. If you think about a valuation of $300 billion.
Yeah, but I don't have to buy your business. I just have to buy your top talent.
Sure, but I think as you look at diversified applications for AI, you could see them start to consolidate other players. And so these companies are just ripe to do pretty much anything they want in terms of expansion to other sectors. So what we're watching now is a valuation increase since 2024, since January 2024, of the entire sector of about 200%. The private markets have been growing rapidly since then at about 56%, and the S&P has grown at about 36%. So these businesses are on fire.
So the question that I'm trying to figure out is how to spot the winner here and also how to spot the loser. That's where I was going with the sort of memory function and whether it's a winner-take-all thing, because you're looking at these 19. I imagine if you're here 12 months from now, this 19 will not look like this 19. I just can't imagine it. Maybe you think that they all have the same kind of success. But I think right now there's a big fundamental question as to, does ChatGPT run away with it, right? That's part of what the argument is. Claude has had a lot of success, for example, in the coding universe. ChatGPT is going to have ChatGPT 5, which apparently everybody's saying has coding that's as good, if not better, than Claude. Does Claude, therefore, back to Becky's issue or question, catch up? But does the memory piece, if you've already started down the road with one of them, mean you're not going to go to the other?
They all look like pretty interesting investments if you look across the 19, but there's certainly a ton of consolidation at the top. I mean, OpenAI is 10% of the entire private market valuation of $3 trillion. So, there's a lot of attention at the top.
To the extent that there are folks who can play in this business, most of these are private companies, for the most part.
All 19 that I'm talking about are all private.
There's ways to play those in the public markets, though. For example, OpenAI, we talked about it last week. If you were to own shares in Microsoft, Microsoft is a huge owner of OpenAI. I don't know if you believe that that price tag is actually embedded in their stock at all. SoftBank, for example, a public company that you could actually invest in today, would get you into OpenAI. They just put in $30 billion into this company. So my question is, if you were to sort of peel back the onion on this, and by the way, there's other companies, including Fidelity, T. Rowe, and others that also have exposure to this. Are there ways for the public to play the privates in this context?
For sure. I mean, that's what you saw with the NVIDIA stock as well. That was sort of the original.
Right, but that's the easiest way. That's a straight way to do it. I'm saying, unfortunately, you have to do a sort of bank shot situation.
Yes. If you think about this, too, those 19 companies have raised year-to-date $65 billion. That's half the inflows of the U.S. equities market. So a lot of people are trying to invest in these while they're still private. But at this rate, there's a question of whether they ever need to go public.